Just waiting here for you. I just want
Greetings to everyone. Welcome to another episode of State of the Real Estate Market. This is yours truly, Chris Brown. That is I. I'm welcoming everyone. Today is a live episode. We are celebrating a holiday as well. This is Juneteenth, so welcome to everyone. Trusting that folks can maybe tune in a little bit more today. Hopefully, you are doing something eventful, educational, and as always, something that is productive. So, if this is your first time, I am the host, Chris Brown. This is State of the Real Estate Market, where we not only talk about buying, selling, and investing in real estate, but we also talk about different hot topics regarding entrepreneurship, uh, building generational wealth, and just different hot topics that are out there. So, always keep that in mind. So, we're buying, we're selling, we're investing. We chat about those different things and want to make sure that we're keeping you guys up to date as in what is going on and some of the great things that we get to experience. So we're going to make sure that we have everything operational today. I see you guys there, so you guys see me. Make sure that camera is still working. Uh, our fancy studio, as we call it. We have a fancy studio. But without further or doubt, we are going to go ahead and dive into this. Uh, like I said, we do talk about buying, selling, investing in real estate. That also means that we chat in regards to residential real estate, and we also chime in a little bit about commercial real estate as well. So we touch on a number of different things throughout this episode. This is our June episode, Summer Trends and Smart Money Moves. So let's make some money, let's make some things happen, and let's educate ourselves. That's what it's all about. Make sure that we educate ourselves. All right. Fire away. We like this. Okay, switch you guys there and here, and there we go. All right, guys. So June. It is June already. It is the middle of the year. So it is Friday, the 19th of June. Yours truly. If you guys haven't done so already, be sure to like, subscribe to the YouTube channel. Always want to remind you guys to do that. Chime on in. So with June, I hope that's not too bright for you, but with June, existing home sales rose 3.2% to a 4.17 million annual pace, the fastest since December. So that means we had a pretty big jump. So why June and why it matters for this year. So those are the results for the month of May. So keep that in mind. I know we're in June, but these results are from the month of May because we have to tally everything up. So pending home sales in May hit a 6-month high. Ooh, a sign late spring demand is still alive. So this thing about if spring was going to trigger some things to happen, I know we have different economical things happening in the economy that really trigger things. Obviously, a war, gas prices, things all start to trickle down. Interest rates, they're all starting to really take a focus on those as well. So mortgage rates climb back into the mid six range. So momentum is improving, but affordability is still under pressure. This has been a trigger for pressure since 2 years ago. So this is something that we're constantly keeping an eye on. When those rates did come down a little bit, we did see some improvement. We did see some buyer uh, interest start coming back to the market. People hopping off the fence, but when those rates start hiking back up, they start hanging around the fence once again. This month's focus: summer trends and where disciplined buyers, sellers, and investors can still win. So we got some things to talk about. So for the agenda that we have, national snapshot, sales pending, contracts, inventory, and prices. Always keep in mind when we do this episode, we start on a national level and then we start narrowing it down. We start narrowing it down to the Florida market and then to the Tampa Bay market. So always keep that in mind when if this is your first time, or even if you've watched this a number of times and just didn't realize that that's what we're doing. We start on the national market and then we narrow it down to more of a local market. So Florida and Tampa Bay inventory pressure, condos and buyer leverage, rates and financing, what 6% plus money means in real life. some different strategies now that we're at that 6% plus interest rate. Builders and supply, what new home trends are telling us, investing in commercial real estate, where smart money is moving, and then we always follow up with some Q&A. I know we already got to have a few questions that are out there. A lot of people usually chime in and send me a few questions regarding a few things. So hopefully we touch bases with that throughout today's episode, and we won't have a lot of Q&A at the end because we touch bases on all of the things. So all right, so national snapshot, existing home sales rebounded. Yes, so that means if you're putting your property on the market, it means like some things are happening out there. So May existing home sales rose 3.2% month over month to a $4.17 million annual pace. Sales were up 3.2% from year to year earlier and were the fastest since December. We like that positive trend. So let's make sure that we're keeping an eye on that. This is a real improvement, but sales are still below the long-term normal 5.2 million. So what does this mean? So the market is moving but not ripping. And what it means is we're moving in a direction. I always tell people it's progress. That's what we like. We like progress. So we have to focus on the good things. We do have some progress. If you're in a position that you have to sell or buy, this is the best time. This is always the best time, especially if you're in that position. If you're trying to wait for something, eh, it may not happen. And definitely, if you're trying to wait for the interest rates to drop down to 3% again, that is going to be a long time coming. So keep that in mind for those who are still on the fence, and that's what their goal is, to make sure those rates get down to 3%. So still on this national snapshot, prices and inventory, the median existing home price hit 429,300. So not bad. So May, a record high for any May that we've had. Inventory reached about 1.55 million homes, still below the pre-pandemic norms, but better than last year. Whew, thank you. First-time home buyers made up 35% of sales, the highest share since mid 2020. So that's interesting. So first-time home buyers are getting back into the market, still making things. And I always tell you guys, stay ready so you don't have to get ready. Keep that in mind. Stay ready so you don't have to get ready. Don't wait until everybody starts buying first-time home buyers just to start that process. If you're in a market where you are thinking about buying, go ahead and do the necessary stuff beforehand, okay? Get things in order. Get things in order. Keep that in mind. More choice is helping demand even with rates pushing higher. So as this inventory is starting to increase, people are having more options. I know we were thin pickings, especially during the pandemic times. The inventory was very low. So when anything hit the market, it was like everybody was on top of it. Everybody knew about it. Everybody was keeping an eye on it. They had the alerts on their phones. They had the alerts on their computers. Everybody's calling everybody, taking time off of work. So we don't have that situation anymore. So people can take their time a little bit more and actually have more options in today's market. So national snapshot, pending sales and summer momentum. So what's going to happen for the summertime? So pending home sales rose 3.8% in May to a 6-month high. So things were moving in May. Contract signings were up 4.8% from a year earlier, with gains in all four U.S. regions. So keep in mind that this is that national snapshot. I've had people inquire saying, oh, I don't know if the economy is doing great. Yes, the economy is striving. It's not doing pandemic numbers. So keep that in mind, guys. That was like a false situation, or a situation that we may not see again. I won't say it's a false situation because it actually did happen, but it's an anomaly. You know, who knew about the pandemic and everything else that was going on during that time? So, key takeaway, buyers are adjusting to mortgage rates above 6%. So, people are starting to really think. It was like, hey, I'm looking to buy, and I need to start looking at inventory with interest rates at 6% or above. Okay, what can I do now? Okay, I have options with the interest rates being a little bit above. So keep that in mind. Okay, so supply does matter because it plays a big role in this. But Summer is showing signs of activity, just not on easy terms. So keep that in mind. These homes, opportunities are presenting themselves. I know even with in my book of business, opportunities are presenting themselves, but it is in today's time, today's interest rates. So keep that in mind. So just because it doesn't match yesterday's or pandemic numbers, it means that there's still an opportunity. So keep that in mind, guys. Florida market, what we know right now. Let's pay attention to right now. Let's not pay attention what they're predicting, and let's not pay attention to what was. What's going on right now, guys? Used the freshest statewide real estate releases available to show week and update on this information. So this is basically one of my slides where I am showing you the most up-to-date information, standing taking my Florida angle and making sure that things are in perspective so that you guys have a better idea. Statewide information that comes to me typically comes from the my local MLS where it monitors like the activity for um, single family condos and for the different markets within the state of Florida. So keep that in mind. Some people are asking me, where am I getting this information from? This isn't stuff that I'm making up. This is data that is being collected. So I do homework before I do these episodes. So single family pricing has been more resilient than condo pricing across much of Florida. Condos remain under more pressure because of insurance, HOA costs, reserve rules, and financing friction. So keep that in mind. So condos, a lot of people are saying, well, what's the difference? There's big differences, guys. First of all, compared to a lot of single family homes, condos, they have different fees that need to be paid each month. So even though you may get a great price on a condo, you still have those fees. Because we did go through the hurricanes a couple of years ago in the state of Florida, we're niching it down. We're in Florida now, guys. So in the state of Florida, what has happened, a lot of those condos or those associations, they're having fees that are kicking back to the owners. And what happens is there were a lot of repairs that needed to be done to these buildings, or they may have insurance costs may have increased, and that's all rippling down to the owners of these condos. And what happens? It comes and shows in their actual fees. So they want to make sure that they're prepared, or they might have used a lot of their reserves that were saved up over the years. So now they're having to tap back into that. So if you are in the market of buying a condo, these are some of the things that you need to be mindful of. It's not that it's a thing that you shouldn't do. It's just a thing that you need to be more aware of because these fees have changed, and then it's now than ever more. It's that it's important that you understand what the current budget is, what the projected budget is for that current year. If there's any information about the next year, see the increases, assessments. That's a huge thing right now. Be mindful of any assessments, meeting minutes. Understand, well, hey, what did you guys talk about the last meeting or the meeting before? This information is available to you guys. So keep that in mind when you're buying a condo. It's just that you have to do more due diligence. You have to work with a professional that understands and that is knowledgeable, okay? Understands the process. This is the information you need to gather before you start pulling the trigger on this. All right. This creates two different conversations. Homes are selective, condos require sharper underwriting. That's what I just said. Just explain that. So buyers need to separate cheap from good value. Understand what you're getting. You know, if you may be looking at two properties that may be priced the same, but see what other added value that these properties have. You know, do they have upgrades that you may have to pay for if you wanted those type of upgrades? You know, just because the shell on the outside looks similar, see what's going on. Really determine the value. Value is not only determined by the price. Value is also determined by the features that a property may have. So pay attention to that, guys, moving forward. All right, so looking at this Tampa Bay market, and when I say Tampa Bay, typically I try to focus it down to Hillsborough, Pinellas, and Manatee County. I know there's two more counties that people really pay attention to, and that's typically Polk and Pasco County, and some people really pay attention to Hernando County as well. But these are the three counties that I'm gathering just because that means it's a whole lot more work. But if you want more details, feel free to reach out to me. I'll be sure to give you that information. I can get it for you. I have access to it. I look at it all the time. But Hillsborough County, strongest transaction base in the region, but buyers are pushing harder on turns as supply improves. So that means that they're shifting to that buyer's market. And a lot of people are like, well, what are you talking about? Trust me, guys. I have visited a number of areas in the past 2 weeks, and just to see the amount of inventory that is new inventory, it is astonishing. Land being flattened, hospitals being built, grocery stores being built, roads being created, highways being expanded. This is all happening here in the Tampa Bay area. This is not something that's predicted. This is what you physically can see. This isn't something that's written down saying that it is coming. This stuff is like, oh, we got to slow down. Oh, we have construction during these hours. This is what's happening in Hillsborough, Pinellas, and Manatee County. So Pinellas County still location driven, good homes, that you can move into, but condos and higher fee product face more scrutiny. So keep that in mind. If you're not familiar with Hillsborough, Hillsborough has a lot of land to be built upon. Pinellas County is one of those counties where they almost have reached their capacity for new construction. So they still have areas, but definitely not like Manatee County or even like Hillsborough County, where they have lots of land that is to be built on and that they are building on. So you see these, it's not just communities coming, you're seeing new cities. They're developing new cities. So keep that in mind. Thousands of homes, okay? Not just, 20, 30 homes, thousands of homes are being built. Across all three counties, the edge goes to buyers and sellers who know the numbers. Make sure you know your numbers. It's all about being educated. That's why we do state of the real estate market, because we want to make sure that you're up to date with the information. Understand your leverage when you are facing these opportunities. So keep that in mind. So a lot of times what happens is, as we're looking over the MLS and we're looking at how the numbers are coming, these are the projections. We get these reports. I get these reports from seeing not only the national news. I gather this information from national news, national websites, gathering the data from there. My local data that provides me with the details that I share with you guys. I do all the hard work so that you guys can have this all given to you in a nice package during State of the Real Estate Market. So keep that in mind. Mortgage rates climb back into the mid sixes. So that range, a lot of people that are experiencing it, I think we even touched just below six at one point. So those who actually took advantage of that because they were ready, stay ready so you don't have to get ready. Keep that in mind. Rising oil prices and hotter inflation data help push rates higher this spring. So those oil prices getting higher. I know you guys see it at the pump, but I would say the past couple of weeks I did see it trickle down a little bit. And I can tell because it didn't cost as much. It still cost a lot to fill up the tank, but it didn't cost as much. But people are being mindful of that. Keep an eye on that as well. Affordability improved earlier in the year, but some of that relief has faded. Like I said, that's probably why we did see some improvement in the month of May, because people took advantage of that opportunity. They saw it and were just like, hey, I'm tired of waiting. How much lower is it going to go? Not that it went extremely low, but it did start trending downwards. They took that opportunity. The takeaway: buyers need workable structure, not fantasy rate waiting. Get off the fence, guys. Get off the fence. Understand that it's more than just the interest rate now. Now you have to look at how the deal is structured. There are opportunities to buy down the interest rate. So keep that in mind. Buy down that interest rate. If you are concerned about how some of this turns out, and if you're paying way too much for your real estate, also keep in mind there are ways to be able to negotiate these deals. That also being said, financing strategy in a 6% plus market. We're talking about strategies. Little something going on there. But first, so if you're thinking about strategies, use seller credits to reduce cash to close or buy down the rate. There's an opportunity for you not to have to bring as much funds to the table. Leverage that. Okay. I'm looking at a couple of opportunities right now where it's like, okay, you may have to come to the table with 20, 25,000 for closing, but if you can negotiate the deal, you may have to come with less than half or half of that. So who could use an extra 10,000 in their pocket? I could. I could use that. Compare resale deals against builder incentives. Do not assume resale is always better value. This is very true. I'm seeing this very much so in communities where the builder is still building. A lot of times when these communities are being built, they take years to fully reach their capacity. It doesn't happen, within a few months. It takes years. So a lot of times life happens. Life happens, transition happens, and people may be in a community for a couple of years and then they're looking to move because life happens. They're in a position where they need to make some changes. So keep in mind that one, if you're selling, you're putting the property on the market, understand who your competition is. Your competition is going to be the builder. The builder is going to be your competition. Keep that in mind. Then, if you are a buyer, look at what incentives are out there. See what the builder is offering. But if you see a resale that you're very interested in, see if some of those terms are that you may be able to negotiate. Negotiate those credits. Get those credits. Get those sellers credits. Reduce the cash that you have to bring to the table. Reduce maybe even the interest rate. Really look at what your options are, especially if you like the property. If it's something that you like, let's start doing some research. Keep that in mind. Focus on the payment you can sustain without strain. Sustain without strain. Keep that in mind. Let's not start getting house, what do you call it? House poor. I guess you're buying a house, but you can't do anything else. You can't do any because you're paying so much each month. So keep that in mind. You want to have an opportunity to live a life. You got a brand new house. You're just moving in. You want to decorate the house. You still want to do some vacations. You still want to go out to eat. Still want to go to the movies. Keep that in mind, guys. Okay, keep it in mind. Fourth pillar here: protect reserves. A deal that empties the account is not a strong deal. Keep that in mind. Those reserves are important. You were in the process of saving. If you're buying a home, you're in the process of saving. Keep that in mind. If you are looking to buy, keep those reserves high. See how you can negotiate your deals. All right, builders development and supply. So this is real big because I am on the developer side myself. So as I'm looking at different opportunities, it's not just the opportunity to do the deal, but it's also being able to see how things happen moving forward. So new home sales fell 6.2% in April to a 622,000 annual pace, and we're down 6.5% year to date through April. So as this information comes in, we'll see what these numbers look like. Like I said, those resale prices or numbers were looking much better last month. Builder incentives are still a major lever because supply is better and buyers are payment sensitive. Yeah, of course, builders will always have the better incentives. In the Tampa Bay area, we have builders that are offering $20,000, $30,000 towards different incentives. As a resale, not everyone has that 20, $30,000 that they're willing to give up, that they've paid down, that they've earned in equity of their home. They're not willing to give that up. So keep that in mind as you guys are going through it. Builders will always have strong incentives, just understanding your market and then what you really want. Just because it's a deal, but it may be a little bit further out. How does that impact your lifestyle? Keep that in mind. In the Sunbelt markets, multifamily supply is still working through the recent wave of deliveries. And what that is a lot of these multifamily projects that you guys are seeing are getting, you're like, oh, all of these multifamilies are being built. Well, keep in mind, in order to do a multifamily, it takes months and months and months of planning, if not years of planning and getting approvals for that project to jump off. So a lot of this stuff was already pre-approved. When you guys are seeing this stuff, they're throwing up buildings in just a couple of months. Well, it happens like that because it was already pre-approved, and things are already happening. So they know these things are going to be hitting the market, and it creates competition, which could be good. So that not only are buyers looking for different incentives because the inventory is building up, builders are also looking for, they're also providing different incentives as developers. If you're looking at multifamily, say rental properties, rental prices, you're going to see those. I guarantee you during the summertime, you're going to see those prices come down some. A lot of people are complaining that rental prices were through the roof, which I understand. I totally understand. But at the same time, now that you have more projects that are being completed, that competition is because now you're going to say, okay, this unit's been here for the past, it's 5 years old compared to this property that is brand spanking new. And they have these incentives to get people into these properties. Now people have to compete. So it can be healthy. So keep that in mind. Developer takeaway: supply expansion creates opportunity, but only if your numbers stay disciplined. And this is where it comes to a numbers game. A lot of people who are having strong success as developers, as investors during the pandemic, they made a lot of money during the pandemic. But now it's like now you really have to pencil this in. Whereas before, you can just get a property and it would appreciate in the next couple of months. So it would cover a lot of your mistakes. So that is not the case now. You really have to know your numbers, understand what you are getting yourself into, working with others that understand numbers, that have the experience, and understand the cost that is involved. So you can reduce the surprises. So I had somebody say that a mentor doesn't alleviate risk, but a mentor illuminates the areas that you do not foresee. So those dark shaded areas those uncertainties, that's what they primarily do. They illuminate the mistakes that you're not able to see, and you don't know what you don't know. So keep that in mind. Working with professionals that understand the market, have a better idea of what's what for you. All right, so summer 2026 positioning, check, 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 check. Buyers, more options, more negotiation, but payment discipline matters more than ever. So for my sellers, oh, sorry about that, guys. So for my sellers, for my sellers, still possible to win, but pricing and presentation have to match this market. Then for my investors, these are my friendly folks. Smarter entry points exist, but only for deals that cash flow or have a clear value add path. I talked that to a lot of my mentees when we were looking at these different uh, investment properties. You're looking at the investment properties. They're like, well, at Pencil, it's an opportunity, but why is it an opportunity? Do the numbers make sense today? Let's not look at tomorrow's number. Let's look at today's numbers because we have to be more mindful of that. Okay. The summer rewards discipline, not desperation. Ooh, that was a good one. I didn't even remember I made that one up. This summer rewards discipline and not desperation. Ooh, I like it. I like it. So guys, investing in 2026, what actually matters? Cash flow, expense control, the quality still matters more than appreciation stories, insurance, taxes, HOA exposure, the cap discipline matters more now than it did in 2021, 2022. Like I said, a lot of people were getting into this and they were able to make mistakes. Now they really have to pay attention. Mispriced inventory and selective redevelopment are still better stories than blind bidding. Keep that in mind, guys. Let's make sense. Make it make sense. Okay. If the math is not mathing, then it's not a deal. Okay. The math has to math. If the numbers are thin before closing, they usually get worse after closing. Keep that in mind because there's the uncertainty. You never know what exactly is happening. So